All right, this video is going to cover 11.1 in our textbook. And so we are going to be working with the general journal. You need to be on pages 273 and 274 in your workbook and page 326 in your textbook. We've already learned our 4 other journals, and we've learned the specific transactions that fit into those. If the transaction does not match up with those, then it goes into the general journal, and you will actually record things in the general journal as we have always done. But since we now have subsidiary ledgers, you will notice that in the post reference it will look a little bit different. Also, you're going to notice that for the most part, you have seen some of these transactions before, but we will have some new transactions due to the fact that we are now a merchandising business. So let's go ahead and start with the first transaction, December 5th. Bought office supplies on account for Millam Corp. Now, we've bought office supplies on account. Why does this not go into the purchases journal? The reason it does not go in the purchases journal is, remember, the purchases journal is only merchandise bought on account, and this is supplies. So if you take a look on page 273 at the very top, you will see your general journal. So this is how we are going to record this transaction. You will notice it says supplies office. Again, we've recorded just like this before. The supplies office is debited. Accounts payable is credited. Now the difference is, because we have our subsidiary account, that the Millam Corporation, you will notice we're going to do post in 2 places. We're going to post the 532 in accounts payable general ledger, but we also post the 532 in the subsidiary ledger. So if you take a look down at your general ledger or at your subsidiary ledger, you will notice that I have recorded that there. And then if you take a look at your accounts payable ledger, you will notice that that now also has that recorded as well. So go ahead and take a moment and record that information. Okay, let's take a look at our next transaction. Returned merchandise to Griffin Incorporated for $248. All right, so we had made a sale, and now they are returning this information or this merchandise to us. So this is now a new transaction that we have not worked with before. So now if we take a look, they're returning this merchandise. It was on account, so an accounts payable for Griffin Incorporated. Typically, our accounts payable is credit, but since they've returned the merchandise, we need to debit that account to take it off, and you will notice it says accounts payable / Griffin Incorporated. And now we are learning a new account, purchases, returns, and allowances. Purchases, returns, and allowance is a credit balance, which offsets the purchases account, which is a debit balance. And so at the end of the month, when we start taking a look at some of our financial statements, we will see how the purchases and the purchases, returns, and allowances work together. We call this a contra account. So we need to record accounts payable Griffin account, the 248 in 2 locations. We need to record accounts payable in the general ledger, and we also need to record it in the Griffin. So if you take a look now at accounts payable, you will see that written there with an updated balance, and then you will also see that written in the Griffin account. Oh, and I did not show you the supplies office. All right, that is it for 11.1. You need to complete the on your own 11.1 for transactions, but again, just the 2 same transactions that you learned.